We are moving on to the next chapter. So shares chapter is over. Next is issue of debentures. Chapter is almost similar to shares chapter, but don't worry, it is easier than your shares chapter. The basic entries are same, like application, allotment, then we have first call, second call, all those installments, all those entries are same. Then we don't have forfeiture, reissue part. So you just have to go through, you just have to study the basic entries which you have studied in shares chapter. Okay, instead of writing share application, now we will be writing debenture application. So that's the only difference. So that is easy topic. Now, what is a debenture? What is a share? First of all, what is a share? You remember the meaning of a share. Share means it is a unit of the share capital. When the total share capital is divided into different units, each unit is called a share. Now, what is a debenture? Debenture means it is actually a document. It is a written document issued by the company. Company means you are the company. By the company when they borrow money from the public. So it is just like taking a loan. Taking a loan means you are taking from the bank, but now you are not taking from the bank. It is a borrowing you are taking from the public. In return, what the company issue is called a debenture. So that is a document actually, that is a written document which is an evidence that you have taken a debt or you have borrowed some amount from the public. So it is a written document evidencing a debt made by the company. That's the meaning of debenture, which is there in the textbook. The first sentence itself you can write as the meaning of debenture. So this is the concept. Understood? Actually this is a document issued by the company to the public when they raise money from the public. So that is given as an evidence. It's given as a proof to the public. Then debentures will be usually written as, the name of the debenture will be like 10% debentures or 9%. The rate of interest varies, but there will be a fixed rate of interest attached with the name of the debentures. Understood? So on debentures, I mean the amount borrowed from the public. Suppose the company has borrowed 1 lakh rupees from the public. On this 1 lakh, company will provide 10% interest. And this interest is fixed in nature. That means whatever that happens, we have to pay this. You remember dividend on shares? Dividend on shares means that is the return you are giving to the shareholders. That return is termed as dividend, not interest. On shares, we will refer it as dividend, and on debentures the return is referred as interest. And the difference is that debenture interest is fixed in nature. Whatever that happens, that means even if the firm is incurring loss, you are supposed to pay them interest on debentures. That is why it is known as charge against profit. Compulsorily you have to pay this interest of 10%. That means amount will be 1 lakh into 10%, 10,000. You understood? Then usually debentures will be secured. Secured debentures means charge on assets of the company. And to whom we have to pay this interest? It is paid to debenture holders. Debenture interest is given to whom? To the person or to the people who are holding debentures. Who are holding debentures means that is the public. To the public you have issued when you raised money. But it is not like shares. Understood? This is actually a borrowing. Shares is not a borrowing. That is to raise money. That is to raise your capital. You are issuing shares. Whereas debenture means that is a borrowing just like a bank loan. Okay, so the balance sheet format, you remember, we have shareholders fund section, then we have non-current liabilities, and then we have current liabilities. I'm talking about the liabilities section. Shareholders fund or share capital, where it we write? Under shareholders fund. Under the first section, we used to write that share capital. You remember the balance sheet we prepared in the last chapter. So that share capital we were recording under shareholders fund. Whereas debentures will be recorded under non-current liabilities. Okay. So debenture interest is given to debenture holders, and these debenture holders can be called as creditors of the company. What is the meaning of creditors, or who is a creditor? The person to whom we owe money. That means we have to pay money. The company has to pay money to the debenture holders, isn't it? And after 5 or 6 years, at the time of repayment, we have to repay this amount back to the public. So they are actually our creditors. So debenture holders are creditors of the company. We have to pay them. Then debentures will be usually secured. Secured debentures means, suppose you issued some debentures, you borrowed 1 lakh, like in the example, from the public you got 1 lakh rupees, and you agreed that you will make the payment. That means you will repay this 1 lakh after 5 years. So this was the agreement. But after 5 years, the company was not in a position to repay this amount. So in that case, what will happen? The debenture holders will not get their amount. Your creditors will not get their amount. They will have to suffer a loss. So to avoid that situation, usually what they prefer is, what the public prefer is secured debentures. Secured debentures means, as the name indicates, it will be secured. How it is secured? It is having a charge on assets of the company. Meaning is, in case the company is not in a position to make the payment after 5 years, what they can do is, what debenture holders can do is, they can sell the assets of the company. If it is secured debentures, there are unsecured debentures also. If they are holding unsecured debentures, they are having high risk. So usually debentures will be secured, so the debenture holders will not be having much risk. Even if the company is not making payment, they can sell, the public can sell our assets. Public means people who are holding our debentures, not the entire public. The debenture holders can sell our assets, and then thus they can get their money back. So that's the meaning of charge on assets of the company. So this is all about debentures. Now the journal entries are similar to shares chapter. You don't have to study anything new. Then on the next page, 9.2, they have given difference between debenture and share. Again, you will get only 1 mark question. Theory will come only for 1 mark. So you just have to read it. No need to by heart the entire topic. Just read and go through the difference between debentures and shares given there. Then you have types of debentures. I don't know whether you have studied this topic in business studies. Types of debentures, you have zero coupon debentures, then with interest debentures, convertible debentures, non-convertible debentures. So all those topics you can just read and understand. Then the main topic now what we have to discuss is, all these theory portions you just have to read, but you have to read and understand the concept. You have to remember, even for 1 mark you are getting 13 1 mark questions in part A and 7 questions in part B. So again 20 marks you are getting from that. So 1 mark questions also you have to give importance, you have to read that. Then issue of debentures, that's the main topic we have to discuss now. You give the heading, issue of debentures. And they are talking about the minimum subscription here. For shares also we had minimum subscription, like before you allot shares, you have to ensure 90% of the issued number. Like suppose you issued, the company issued 1 lakh shares, you should get a minimum subscription of 90%. What is 90%? How much will it be? It will be 90,000. So, minimum you should get a subscription of 90,000 before you allot the shares. We know that there is a situation like under subscription, but you have to ensure that you have received minimum 90% of the issued number. Understood? This is regarding shares that we had discussed in that chapter. Now regarding debentures, the meaning is what you have to ensure is minimum 75% of the issued number. Instead of 90%, here it is 75%. It's given on page number 9.7, the topic minimum subscription. You just have to remember this. 75% of the issue must be subscribed by the public, then only you can start allotting the debentures. This is about debentures. Okay. Now you give the heading. First you wrote no issue of debentures, then below that you write. There are 3 topics below that. Like in previous chapter, shares, we can issue debentures for cash. The first one is issue of debentures for cash. The second situation is issue of debentures for consideration other than cash, like you purchased machinery and in return you issued shares too. Similarly, you can issue debentures also. So those 2 topics are similar. So that's what I told you in the beginning. It's easy. The third topic, so you just write the headings now. That is issue of debentures. The first one for cash, then second one for consideration other than cash, and the third one as collateral security. That is a new term. We'll discuss it later. Now you just write the headings. Collateral security. Okay. Yes, so this is all about issue of debentures, the headings. Next, we'll discuss in detail the first one, issue of debentures for cash. So once again you write the heading, issue of debentures for cash. And below that we can issue at par, that you all know, at par, or can be called at face value, or can be called at nominal value. Then the second situation is we can issue debentures at premium. That's also similar to shares chapter. Then we can issue debentures at a discount, which is a new term, because shares we didn't issue at a discount. Now debentures can be issued at a discount. So that is only the new entry which you have to learn. Yes, so we'll start with the first one, issue of debentures for cash, and now we are issuing at par. That means at face value itself, the actual value. We'll work out. Okay, we'll work out one question with premium. Before that, we'll just revise the entries we studied in the chapter shares. So the first journal entry, you remember, you can get the money either in lump sum or in installments, isn't it? So if you are getting the amount in lump sum, you remember the journal entries we learned in that chapter. The first one is when you get the money, the first entry is, and this is lump sum method, bank account debted to debenture. Okay, previously we wrote share application. Now we have to write debenture application and allotment account. Okay, then after that, what did we write? Share application and allotment debted to share capital. Now what we have to write is debenture application and allotment account debtor to. Now what we have to write is, we can't write anyways to share capital. Don't make mistakes after studying both chapters. Don't get confused. Debenture application and allotment debtor to, instead of share capital, what we have to write is not debenture capital, it is percentage debentures which you have to write. So everywhere you have to write percentage debentures instead of share capital. Understood? So percentage debentures means if the rate will be given, no, with the name of debentures, always the rate will be mentioned. That rate, like 10% or 9%, that rate given in the question you have to write here. Okay, so this is the basic entry when it is received in lump sum. That's the first method. So this is the only difference. Instead of share, you wrote debenture. Then since we are receiving in lump sum, we are writing it together, application and allotment. Then instead of share capital, you must write percentage debentures. So that's all. Then the next one is when it is received in installments. When it is received in installments, you remember the journal entries, at least the basic entries you would be knowing. So when you receive in installments, the first one is bank account debtor to debenture application account. You will receive the money first, then debenture application account debtor to percentage debentures. Then the next one is second installment, means the allotment due entry must come first, then the receipt entry will write. So debenture allotment account debtor to debenture allotment account debtor to percentage debentures. Then the next one, instead of share capital, we wrote percentage debentures. Then the next one is bank account debtor to debenture allotment account. The next one, the first call, suppose first and final call. So debenture first and final call account debtor to percentage debentures. Then finally you can write bank account debtor to debenture first and final call. Okay, so these are the basic entries which you have already studied, but write it once again because now we are writing debentures instead of shares. Now suppose it is issued at premium. These are the entries when shares are being issued at par. Okay, now you give the heading that's familiar to you. So you write the heading issue of shares at premium. So when you issue shares at premium, what is the difference? We have to open one account, that is securities premium reserve account, and we know that will be credited always. And I am not talking about the forfeiture and all. At the time of issue, SPR should be credited always. Then it will be opened with which term? What did I tell you in the previous chapter? SPR must be written with the term share capital always. So in this chapter, this SPR must be opened with the term instead of share capital. Now what we have is percentage debentures. And if nothing is mentioned, premium will be collected along with allotment money. So allotment journal entry is this: debenture allotment debtor to percentage debentures, and the bank entry also there. With which term you will write SPR? With share capital term. So here it should be with percentage debentures. That means with this entry, if there is premium, you have to credit securities premium reserve account. Clear? So what you have to do now is you just give the heading. Basic entries you have to write first, then you give the heading issue of shares at premium, and you write these two entries, only these two. Okay? In case premium is collected with this is securities premium reserve account. Then in case premium is collected with first call, where will you write premium? Debenture first final call debtor to percentage debentures to securities premium reserve. So accordingly you can change. Now for the time being, you just write with allotment. These two entries you write below the heading issue of debentures at premium. Only these two you need to repeat with SPR. Okay. Then we'll work out illustration number 4. Page number 9.11. Issued 5,000. Did you see 5,000 is the number? If it was the amount, they will write rupee symbol. So this is the number, and it is given 9% debentures. 9% is the fixed rate of interest. I told you, no, it will be written with the name of debentures always. Then 100 each, it's collected at a premium of 20%, and you remember on which amount you have to compute this premium of 20%. Premium must be always computed on the face value. Here face value is 100. On that you will compute 20%. So what is your premium? The premium is 20. What we are collecting is 100 plus 20, 120. So the issue price here is 120. Then installment method you are following. Application 50. Allotment, the balance is what they are saying. Application is 50. So what is the balance? The balance is, to make it 120, you are collecting the issue price, not the face value. So to make it 120, it will be 70. And this 70 includes, since nothing is mentioned, premium will be included in this 70. Premium 20 will come in this 70. Then applications were received for debentures issued and also the amount due on allotment. That means there is no calls in arrears. If there is calls in arrears, again it is the same. You remember calls in arrears we opened with the term bank in the previous chapter. Same like that, here also you have to open with the term bank. It's the same thing. Instead of share, you will write debenture. That's only difference. Okay, so this is the split up. Now we can write journal entries. We have only 2 installments, application and allotment, 2 separate installments. So you start writing the journal entries. Give the heading journal. Draw the format. This is illustration number. Did you write the illustration number? This is illustration number 4. Date, particulars, LF, debit, credit. And the first one is bank account debtor to, you must write the narration and all, bank account debtor to debenture application account. What will you write as the narration? That application money received. Then next one, debenture application account debtor to, here the percentage is 9%, so you have to specify that 9% debentures. When you write the entire term, don't write app and all, you write the entire term application. Yes, we haven't written the amounts. Is there any oversubscription? No, oversubscription is not there. So 5,000 debentures you issued, and narration also you have to write, okay. 5,000 into the application is 50, so it is 2,50,000. Then here also it will be same, because there is no oversubscription and all, the amount will be same. 2,50,000 debenture application, the same we will write here for debenture application. If it is oversubscription, amounts will change in these 2 entries. The next one is allotment due entry, and you must remember to open SPR here. Debenture allotment account debtor to 9% debentures to securities premium reserve account. Okay. Now how to write the figures? You are issuing 5,000 debentures, and what is your allotment per share? Just see the split up that we wrote before. Allotment per share is 70. So what you have to do now is always take premium. You have to exclude premium. You have to think about premium only at the time of forfeiture. That is in shares chapter. Here we don't have forfeiture. So you have to take this 70 for allotment. Entire amount you are collecting. So So it's including premium. So it is 5,000 into 70. So 3,50,000 you have to write here. Then for SPR, it is 5,000 into what is your premium? 20. So it is 1 lakh, and the balance you can write for 9% debentures. That is 2,50,000. Okay. Then yes, we have to write the receipt entry. With that it's over. We don't have first call and all. So now it will be receipt entry, bank account debtor to, there is no calls in arrears here, otherwise you have to open calls in arrears with the term bank. You have to debit calls in arrears. Bank account debtor to debenture allotment account, and debenture allotment here, the amount is 3,50,000. Did you see this amount 3,50,000 in the previous entry? We have to write the same in this entry also. If there is prorate and all, amount will change, but now you can write the same amount, 3,50,000. Write the narration and then you can close. So this is all about illustration 4, and you understood, the basic entries are same in this chapter also. Only thing is, here we have percentage debentures instead of share capital. Okay. So learn the basic entries first, then you practice this question.